All right, what we're going to do today is build charts from scratch and go over each indicator. And I have a few participants who will ask questions, which will hopefully represent your question too. We're going to build an oil chart, and you pick oil, the current month, you go to new, and you pick minute. These are my candle settings. Is my thing. These are my default settings. You only need 5 days, and that saves you on Ninja's incompetent platform. Default 24/7, and I am going to add one template that I will send you.
Bob, you're creating this as a 1 minute chart. Are you then going to change it to a 4 range after you?
Yes. We'll do both charts. And I'm looking for something.
In the templates?
Do you think I have a few?
Yeah, I was going to say, I can't believe how many of those you have.
Yeah, I have a few. All right. What I'm doing and what I suggest you do, well, I'm going to send you the template so you won't have to do it. This is to get the angles in the corner easily. You can do it manually, but this puts it in there for you. So I'm making a note to send the master angle to people. Angle. All right. And the first, we're not going to go to, the first thing we're going to put in is the core because that is the core to the system. So we'll go over here. See, this added the 4 angles. It gave the spacing, just so people know the spacing is in pixels, not ticks. So it takes about at least 5 pixels to move it any appreciable amount. You can see that the core is at 20 and the go line was at 20 and this is 40. So it took 20 ticks to get decent, 20 pixels to get decent spacing. So it's not like ticks. So I want to save you guys the aggravation of doing that. And then you go down. I assume you've already loaded your indicators. And you go.
Yes, but the question is, are they complete sets and are they correct and all that? But yes, we've.
Yeah. But I just sent them to you a little bit ago. Yep. So you want to pick the core, DS core. And actually, I can see that these settings are for the range bar. We can do one of two things. We can change the chart to a range, or we can change the angles to the minute. So we're in the minute. Let's change the angles. And it's a 50-degree angle for the highest threshold, 45 for the second, 35 for the same, and the slope is 55 for the ones that are on the candles, and we'll go over that. It'll show you that the candle is over 55 degree. There is a difference. And then down here you have the templates that you'll get will have all this in here. So
okay.
These are the colors I use. And if you want to change them, change them. So we're just going to do one at a time. So let's do that one. This is a non-scripted explanation of things. Actually, we should put one more indicator on that's not a moving average indicator, and that's the OBOS indicator. And how I colored my candles was I had a crimson outline on both the blue, which is up, and the tan, which is down. So if it's not red, it's obos.
Okay.
All right. So it just makes it easier to distinguish which are obos versus not. And I also want to get away with a connotation of green is up and red is down. So, and what we have here is each of these are moving averages: the go line, the core, the alert, and the zero lag. The last three are crossover moving averages. This is a single moving average on the go line, but the color changes predicated upon the angle, and that's what it is, predicated upon the angle. The correct entry for a trade, a core trade, which there's no guarantees, but if you don't get 5 ticks on a core trade, you've got some issues. And this is not necessarily the best example, but that's okay. Static charts are always different than live charts. I mean, static charts are always perfect. So what you need to start doing, and we'll show you how we get there, to anticipate a little bit. And this is a current day time. This is the 9th of November. And I didn't start this. Well, a biggie. There we go. So this is the first time I've seen this chart, these candles. Nothing's been rehearsed. So let's talk about these chevrons. Are that this candle is more than 50 degrees. It's more than 55 degrees. And why that's interesting to note is that they generally have more momentum than candles with lesser angle on them. Mm-hmm. And the slope of the candle that changes the color of this MA slope is not the same mathematical formula that determines the angle of the slope. So, and that's in a way good, because I guess we could change it, but I've been running years with this mathematical equation, and it's a visual thing as much as arithmetically correct. Actually, the math doesn't matter. It's the relativeness of events that matters, how relevant and relative they are. The actual number is not. It's important to get that color blue, but it doesn't really matter the methodology by which you do it as long as it's consistent.
Yep.
Everybody all right so far? Okay. Okay. And as you'll see later on, having this angle here, like down in here, well, right here, it's the core is measuring 46, and that's measuring flat. You can see it's flat, but it'll help us down the road. You'll see. To make a trade, or what qualifies for a trade, is you want the crossover of the core MA, and that is signified by what I call the boat arrow, or an anchor, the anchor arrow, because it's a thick arrow. And the other thing you want to see is that the go line is going in the direction that you want and has changed from yellow to blue. And that the first candle of entry should be obos. And I suggest you enter in on a market order. By the time you do limit orders and chase it for 2 or 3 ticks, you're better off just taking the 1 or 2 slippage on the market. Also, on the first order, or the first crossover of a run, that is generally the strongest one. So where you would probably get in is somewhere around here. By the time you saw everything, you'd probably get in here. At best, you may miss that. If you miss that, you have the same conditions again. It came back to the core MA. This is right next to it. And here's an Obos candle, and you'd have gotten 5 ticks. You'd have gotten 17 ticks. But you got the 5. That's all I want to tell you. If you got in here, and I would have gotten out there, so you got your 5 ticks.
Yeah, that and then some.
Well, yep. I mean, yeah.
Perfect.
All right.
So that now this is a 1 minute chart, of course, and I know you trade off the 4 range.
Yeah. Let's bring that up. Well, okay. We're not talking about trading today. I mean, right now, we're actually talking about chart setup and their relevance. We'll just make a note. This is not the fastest way to build charts. You make a template of the 4 range completed or the minute completed, and then just change the angles of the core MA. Is the fastest way of doing it, or as I'm going to send you a template for both. That is, you'll get 3 templates. The angle, so this goes on everything first. When you have it, so when you make additional charts, you'll have those angles on, and the templates will include everything. But we can do that. You just go File, New, Chart, and CL, there. Change that to a bar range. 4, it's my default. Again, 5 days, 24/7. And we'll put on Obos. New, and we'll put on Core, which already has the 4 range on it. And this is the 120 EMA. That's on both too. It's just a little higher on here, and that's part of the core. And you'll notice, I know we're backtracking a little bit, but you'll often get, wherever we were, 120 EMA rejection, where it's coming down and it's going in the direction you want, but it often hits the 120 and goes down.
Mm-hmm.
On the 4 range, let's get them to the same time. Oh, we don't want to get them to the same time. We want to see. Let's see the difference. Actually, everything up that we talked about in the minute, except it's not how I do my candles, but it's probably a little better. Everything that happens on the 4 range just happens a little faster sometimes. But wherever you see it, I mean, this is an entry here, the crossover here, based upon current indicators and information, you'd hop in here and you got your 5 ticks. A bunch of chop through here, you're not doing anything. You've got, this hump is important. It's not going to say, I mean, there's a hump here too, but it's predisposing the disposition of going short. And even though and then we have yellow here, and it's basically a chop zone indicator. When it's both red and it's both in yellow, it's basically a chop zone indicator. But you can see here, you've got this hump here. So we're predisposed towards going short. You get a blue on the angle. You get a blue on the, see the angle changed before the crossover. The crossover didn't happen to here. And you get in on the first crossover. So you have to pay attention. If you missed it, you still end up okay. I believe. I mean, ideally, you'd have gotten in somewhere here, and let's see, we'll take it down to here. Well, that's your 5 ticks. Well, and that's fine. That's what we're going for. And you take it here, and you're going to get out somewhere around here. Because that's still, even though that's an up candle, it's an up because it's right there. You're going to get out somewhere there. And you got your, 5 or 7 ticks. So even if you're a little late on the first crossover, everybody all right?
Yep. Makes sense.
All right. I mean, going backwards. Well, here's one. This would, you have the crossover. You wouldn't have seen the blue and blue on this candle. You'd have seen it here. Take it, that's why you want to do fixed targets. At least you got your 5 or 7 ticks there. And again, this is you see how it goes up, and it's usually the strongest trade, and this is a crossover. Notice there's no crossover here, so by definition, I'm calling this a continuation trade. All this was a retracement and pullback. And then I got the double and the blue and blue, and I've got a candle here that's obos because it's not red, and take it up. Well, we'll say to here. So you got your 7 ticks.
Yeah.
If you have fixed target, you stay in and then bail out at 4 or 3 or something like that. Okay, this is technically another entry. It's right here. It's right next to the EMA 8. I don't know if I would take it, but if you have your fixed target, it goes to 7. And you just have to learn to push the close button if it doesn't do what you want. You don't hold out to the stop or bring out your stop as it's coming up. Bring out your stop to a +2 or +3. This trade I definitely wouldn't take. Oh, guess what? I forgot the angles on this. We'll go back and do that. But it's right in that. And 7 ticks. So you can see in this short run of 10:36 to 12 minutes, you just got 8, 15, 23, 30 ticks.
Yeah. Be done for the day.
Well, and that's only with the core crossover and the go line. And obos candles. Everything else we add is just for confluence of that trade, or to garner an extra few ticks in the beginning, or stay in a little longer at the end if that's the type of trader you want to be.
Yeah.
But that's why it's called the core. It is. It's. It just works. It just works. Any questions?
No, I think that's
Perfect. Of course, our job now is to learn how to
do it in a live chart, and that's where we have some practice to do, of course.
Well, live chart's pretty simple. I mean, wait for that to turn blue, and it will, but it's pretty steep. I don't have the angles on it. Yeah, okay, turn blue. So you're in there someplace.
Yeah.
4402.
Yeah, you almost already got
out of that trade darn near.
Well, of course, the first one I picked would be a hot shot. That's why you have other indicators for confluence.
Yes.
But I haven't lost faith yet. The reason why I haven't lost faith is that the line on the minute chart is still pretty strong.
Hmm.
That's why I haven't. We just made our 5 ticks.
Yeah.
So it's pretty simple. Not easy, but simple.
Indeed. Hence the done simply
Right.
moniker.
All right. You notice I'm not jumping in for another one, and the reason being is this to me is signaling it's consolidation is happening, and it's okay. There is so many opportunities. It's okay not to take every trade. You watch every tick, but you don't play every tick. I'm gonna stop the film for a second to rebuild the 4 range.
Okay.
All right. I put the indicator angles on. That's why there's a short break in the tape. The core angle is the most important indicator to me on the chart. The second most is the polynomial regression, the PRC channel. And that is found in the alert. Of course, I have to learn how to do this. The alert zone. Or it better be, or I forget. Or I get Alzheimer's. And I have changed. I'm using Indigo right now. Do you see that on the screen?
Yep.
Okay. You can use any color you want. I did have lemon chiffon, but I was finding it was sort of blending in too well for me. And this is ideal. I mean, I couldn't have picked a better place. The idea of the alert zone is to give you an indication of when a core crossover is going to happen. And a core moving average crossover, as signified by the anchor arrow, cannot happen unless you have the alert zone crossover before it. Conversely, you can have a alert zone crossover and you may not get a core MA crossover. Well, this one's very marginal. The first, I mean, based upon my core rules, you'd enter there because you're going to see, what you're going to see is, and I just change this to cursor, crosshair. Because you see underneath, I mean, you'd see this blue here. You have the crossover, and that's where it happened. And so you would get in somewhere on that candle. And it would be a legitimate thing, but it even makes it a lot better because you've got the alert zone saying, hey, it's okay. And what you're going to notice is that when the candles hug the slope or stay inside the green, you're in a pretty safe territory. It's when it starts to get outside that you have to think about exiting the trade if you haven't already done it, if it hasn't reached your target. But here is where you would get in, and you'd have gotten your 7 ticks, no problem.
Bob, just so I'm clear, on that short candle just to the left of where you are, one with a long wick and the short candle,
Yeah.
you're saying that that's a safer trade because it's to the left of or outside of the alert slope and it's further away.
Yeah.
And so as you get closer,
But yeah, because it. Go ahead.
well, the following 2 candles, by the time you get to that tan candle, it's tucking down. It's the lower edge is in the alert zone, so that's time to. It's indicating consolidation there.
Correct.
Is that right?
That's correct, and it's also separate. The distance between the 8 EMA is increasing this whole way up. The distance between it's going through it, and it's good while it's in there. And this would have been a good trade because you got blue here, you got blue here. A little tighter than I would want, certainly because you're also hitting the PRC6. So I make the assumption that we're going to stop at the PRC6. And the reason why, are you all right with this?
Yep.
Okay. And I'll be repeating it because it's important. But the reason why I like the PRC6 is it's home. This sounds going to sound crazy, but it's the inside the boundaries, which the lower boundary and the upper boundary are the home for the candles. And the candles are very homebody type people. They don't like to be outside walking around and having things happen to them. They're safe inside the PRC6. And there is an affinity for the candles to want to stay inside this. So if you're on the outside of the PRC6 and you see a crossover, you've got the alert zone saying there's a high probability of a crossover. You've got the crossover. And you got the candle that is in Obos. You go all the way up. Now, I suggest you exit if you're start exiting as soon if you have it on a non-targeted thing and you just have a trailing stop. I suggest as soon as you pass the line here that you hit close, because you'll still gain 1 or 2 ticks going up just because of the momentum of the candle. Because if you wait for this, I don't think you're going to be fast enough to close it.
Yeah.
Because you're going to have a tendency to want to wait. Again, these are on to the left. Everything is to the left. It doesn't matter whether you're going short or whether you're going long. Everything is to the left. You want things to the left. And going up, if it's to the left of the alert zone, it's great. If it's riding the 8 EMA, the closer it runs to the EMA 8 as it's going up, that's also, the core MA. It's also good. But this gives you a secondary breadth of exploration or hope with this alert zone. And that's why I use it. Now it's up here, you come around and you say, oh, you have a crossover of the alert zone. Okay. You don't get in yet. I mean, we don't have all the indicators on. So based upon what we've got in front of us now, you don't get in. But you do have some good things to look at, and you'll look at them later. There's a hump here. It's a downward hump, and that's what you were looking on. So you come all the way down here, and this is a characteristic pattern, by the way, that you get one, you go down a little bit of consolidation, and it comes up. Outside the zone again. Doesn't always hit outside. It sometimes just comes up. And you got the crossover. Now, I'll be candid. This is where you get in. If you feel confident, because you already have a candle going down. You already have the hump there. You've got this going down, and it's
That's interesting.
It doesn't hurt if you get in here. If you get in here, that's fine. So it's 44.04 versus it's 4 ticks. So that's fine. There's nothing wrong with that. I'm just saying that get in here and fine. And then we got out here, it's separating. But you get in here again if you want. And you take this one down because this is getting close. It's still inside. Now this is separating a little bit, so you got to be careful. You may not get your whole 43.96. You'd gotten your 5 ticks. Well, you gotten your 7 if you're targeted. You've probably been down there. But get ready to get out. I mean, you get to know it. I mean, these are. These are fringe trades at this point because we're already even though this is next to it, it's separating. But even the fringe trades work.
Bob, the light bulb just went on for me. I'm so thankful for this, your training here, because I can see how those candles move around. They're to the left of, to the right of, they're below, they're above. They're all over the place relative to the alert slope. And it's so interesting that what you said about them being to the left of the alert slope is a safer trade.
Oh, yeah.
Now I can see it. I can see how they're, in some cases, they're drastically far to the right or way above it. But when they're packed in there nice and tight just to the left, I can see how, at least on the static chart, that's just a super safe trade.
Well, it's a super safe trade on a live chart.
Yeah, fair enough.
All right. So you got the crossover here again. You got consolidation. You don't want to get playing that. You have it's below the PRC, the polynomial regression. And then you're waiting again. This is okay. I have a high probability of having a trade of a crossover. I say, here's the crossover. I think we just did that one, but all right, I didn't have it. So we did it. But again, as you get familiar and confident, see when it turns blue here, you got a degree. So you can hop in here now. It doesn't even have to be oboes because you've got the hump in the go line. You've got the hump. You almost have a reversal in the red, but definitely the hump. You've got a candle going in the direction, and you've got a steep angle. Again, angle is important. So this is probably 45 degrees. This angle here too, the alert zone, and everything's going up, and you got the candle here. So if you don't want to get in here, you certainly can get in here, but some compromise, and you got another 5 ticks.
Yeah, that's perfect.
All right. I mean, I should have had it on live because it crossed over here, come down, and even wait for this because this was coming down. This is good. I got a hump. I've got a blue. I hop in there, and you'd have gotten out. So there, I'm not trying to exaggerate what you can do, but you got 15 ticks, no problem.
Yeah.
Okay. Don't live the retracement, but you see it's coming down, and you can do the continuation trade of a core trade. You've got blue, and you've got blue. Don't need in this. To be honest, you don't need oboes. Oboes gives you a safety factor. If it was oboes, it would be great, but this would be 5 ticks or whatever. Well, it's going to be 0 ticks if I do it that way. 5 to 7 ticks. If you had a 7-tick target, you'd be fine. Here we are here. I mean, we cross over. It's coming up. You've got the hump. I would have been in there for 5 ticks. 7. That hump's important. The angle here is high. Okay, now I'm waiting for, if this turns blue, and I have every reason to believe it turns blue. If I look at the minute chart, if I can find, oops, get rid of that, delete. Well, I don't have every degree of confidence going up because if the blue, if the core line had been steep on the minute chart, I'd have been a lot happier.
Mm.
But that's why I didn't take it. And again, the idea is the first, even though there's only 7 ticks, or if you had a 10, you'd probably gotten a 2 because it had gotten up to there. But the first change has usually the most momentum.
Yeah.
All right. That help on the PRC?
I can't. So amazed. I'm just looking there at that last trade we were just talking about. You've got that oboes candle right at the bottom of that structure low. But you look at the position of that relative to the alert slope by the time you get to that next red candle or the next red frame candle, non-oboes candle.
Yeah.
It's so far to the left, that looked like a pretty safe trade anywhere within that candle.
But you got to act fast. Yeah. You can't think about it. You got to react. In my opinion, you got to react to it. You've got this. You got the green. Okay, it's going up. Let's hop in. Bam. You can't say, oh, let's see if it goes a little bit. Let's go one more candle. You can't do that. I mean, it's day trading. It's small target scalping, whatever you want to call it. This is not swing trading. You cannot. You can, but not. You're gonna take some losses if you think on 4 range and minute charts. If you take too long to think, it's an issue.
Yeah. Well, these extra indicators are helping me a bunch now that I understand them, because, going back to that trade we were just talking about, you've got the PRC, the wicks down below the PRC, you've got the change from the fuchsia to the green. There's a lot of different things besides just the core, which of course we're paying attention to that, but
no, these other indicators give you other opportunities to get into trades on a high probability basis.
Yeah, that's great.
Again, you want to, as you want to take trades that start above or below the polynomial regression. If you want to start making money fast and not screw around, do 5 or 7 tick targets. Take every trade from, it could be really close. Don't worry about the trades in here. This is not really close, by the way. And this is not really close. Do they work? Yeah. If you see a clear-cut core trade that starts in the center, and you get the feel for because if you extrapolate this line, it's coming down on like a 45. And if you look at the PRC bands, it's going to come down too.
Right.
Okay. So you like it's going up here. Now we got it going up. But am I going to enter a trade there? Well, it'd have to be only 5 or 6. I'm not going to enter here. It's nothing's indicating to do it. But as I'm approaching that, I'm thinking it's got to be really strong indication to do it, because I'm assuming that, and these move. They're not static, and sometimes they move 30 ticks. But generally, for high probability, you want to use them to your advantage, not outguess them. If you do internal trades, what I call an internal trade, again, this is the strongest 5 or 7 ticks. Would you get more? Yeah, in this case you would. You've got the steep angle here. You would. But if you just want to make money with less stress, take the trades that are here, because it's outside. It's outside. Do it on the 4 minute, on the minute or the 4 range. I prefer using the 4 range to base my trades on. I look at this to see what's happening. Like I said, when we did this one, if the core line had been going up, I'd have hopped in again. But it wasn't, so don't take the chance. All right. Are we okay now with the core and the alert slope?
Yes.
And the polynomial regressions?
Yes, sir.
All right. Well, we can come back to anything. Let me get rid of the, well, wait, maybe we won't. Maybe we'll show you. Next indicator we'll put on is the zero lag. I have a few indicators too.
Yeah, just a couple.
And I'm going to turn the black and white on. Well, I'll do it false first then. I'm going to remove the, I think I'm going to remove the price lines. Okay, the zero line. Can you see those little white dots? I changed. Yes. Okay, these little white dots. Let's change it so people can see it. That's a little better.
Yep, that's nice and clear.
All right. The zero lag is another indicator to tell you of potential trades. And again, it's the further left that things are, the better they are, because it usually indicates higher angle. And this is a higher, well, the angle may not be higher, but it tells you where the candles are, and that's what you really want to be. And this time it happened. The zero lag indicator is an indicator is there's no lag. It's like a 0, 0 period. There's no lag. As soon as the candle changes, that dot's there where it is, because there's no periods involved. It's like right now, this is where this plot is. So, and the hierarchy is just the perfect hierarchy here. You want to see the zero lag left of the alert zone, and it's, and the 8 is the wild. It's the 8. I'm stuttering here. We're going to go back and record this now. Anyway, it just helps you to tell you that you've got enough angle to get in and stay in. Now, because here see, you're getting out here too. I just like it. How's that?
Fair enough.
I have to figure out. I just think it gives you an advantage to know that a faster turning, it's really actually, you know what it is? It's actually, for me, it's confluence for the alert zone. So the alert zone is confluence or additional effort for the core. Mm-hmm. The zero lag is additional confirmation of the alert zone.
Got it.
Yeah, you know what? We just crystallized it. I just liked it. Yeah. But here's what I've done recently, and I think it helps. It helps me, so it's going to stay on my charts. Again, the zero lag is a crossover of two indicators. And the up is black and white is down. And it's telling me here, and it's fast because as it happens, but it's going from white and just see a little bit of black. But you can follow the line and you see black, it's definitely changed, and you can get in here.
And what generates the black or white line?
The crossover of two different moving averages based upon the zero lag indicator.
Okay.
There are three different types of indicators, moving average indicators on the chart. There's actually four. 3 are crossing over indicators. The core MA is a crossover moving average. The alert zone is a crossover moving average. And the zero lag is a crossover of two different moving average periods.
And let me ask you this too. The width, that ribbon changes width. What drives that?
The distance between the crossovers. So it's a pretty tight crossover for that.
So as you move up that long run there, at the top at about 1121, it crests and it puts in a structure high, and then you've got a fairly wide gray ribbon there. The width of that, I'm sure, has meaning, as it does on the alert slope. I'm still trying to understand that, but
well, it just means that more of the slower moving average is involved.
Okay.
So, Michael, after some discussion we had offline, what is your conclusion on that you just espoused, which is excellent?
Well, conclusion is that as you're looking at the shaded areas of the alert slope,
Both of them.
There's more shaded area, and you're heading closer to confluence or reversal in the trend. So you
Prepare to exit.
Yeah, consolidation. You said confluence, but consolidation. No, that's fine, and that's excellent. So, and we have seen that when it's narrow, now the alert slope isn't going to change as drastically as in width, because they have the different periods are not that far apart, so they're going to be very similar. But it turns out that these are optimal At least for me, they're optimal settings. But you can see up here, if you can see, there is starting to be a separation. Not only do you have a thickening of the zero lag, you also have a separation. And you also have a separation starting down here. So, because this candle, this is where we are. So we're looking at the area below the candle as it's being developed. And it works the same on the minute chart. Again, the charts are ambidextrous. Either one works. It just depends on what you are looking for. And I use both. I mean, I know I'm being redundant, but I do use this to stay in or not. But sometimes I'm looking over here, and I look in at the right time. We had the cross, and I don't know if this is it's going to show up on the. I got to do Control J. Okay. I mean, that would be a good in for me. And it turns out that it's a good in it's at the classic in for the dark side. I mean, if we've done simply right there. But on the 4-range chart, we're getting in there. You could possibly get in there now with confidence. So it's interesting. I mean, they both. I like the 4-range charts, but I'm not in there as long, in the trade as long.
Yeah.
Yeah.
And I don't, because let's see, you go up. This candle here is hiding all this action, a lot of this action. I'd rather know what the candle's doing. And I look at the 4-range as what's happening inside the minute chart, and you get 4 to 7 range charts to one minute chart, depending on the action. So, are we all right?
Yep. That all makes a lot of sense. It really helps to kind of make sense of it. All the different pieces.
Again, as long as the candles are in the black, are the line of the zero lag is running through them, you're pretty safe. As they start to get away from it, you want to consider what's happening. So now we haven't. That's all about the 4 moving average indicators. Do you want to talk about others? I mean, the other is the MACD and the broadhead.
Same idea. Whatever for what kind of where we're at in our understanding. Whatever you can throw at us that we can make sense of.
Well, yeah, it's just observations. DS MACD.
So
kind of like what we were saying before, in terms of the hierarchy, you've got the core, of course, then you've got PRC, and then you've got the zero lag and alert slopes and all that good stuff. Do you think that the MACD is the next most relevant?
Well, I actually believe. I mean, the way I look at the zero lag and the alert zone as a single indicator. I mean, I look at them, they should have good confluence in what you're doing. I mean, you don't really want to get in a trade if the zero lag hasn't crossed over.
Mm-hmm.
It just, you don't want to get in a trade unless the zero line's crossed over. It would be one of my rules. And again,
and when you say crossover, you mean crossover the core?
Well, no, crossover itself. Have the triangle before that you enter the trade. I'm not going to enter here. Because it hasn't. The periods of the zero lag have not crossed over. They haven't crossed over to here.
I see. So you're watching the
little triangle.
Dotted line. the triangles, the indicator, pops up, but what you're talking about is the relationship with the white dotted line between the black and white ribbon.
So is that correct?
Is that the cross that you're?
No, the cross is when here's what you don't have on.
Yeah, maybe I don't.
Okay, well, here's what this triangle
Uh-huh.
says, that this indicator, which is the zero lag, and you can't see the black probably because I hardly can see it, has crossed over. That it's going from white to black. I'm not going to get into a trade unless the crossovers happened.
Got it. So if it's white, it's still indicating short.
It doesn't. No, the white ribbon. Yes, the white dots. Yes, the white dots. And I'm not necessarily staying. I mean, this is sort of chop. Stay out of chop. Horizontal stuff is terrible. The other thing you want to look for is angle again. Yeah, that's safe. I was looking at this one here, what I've gotten in here.
Right there. 11,
yeah, but
yeah,
11. Yeah. I might have gotten it, even though it hadn't had the cross yet, which would have been down here. And definitely, that's a great trade there.
Yeah.
I mean, this is, again, pushing the envelope. But because there is so much black, I'm not worried about a quick reversal. But to be safe, wait for it, and you got it. So, I mean, what's it, who cares?
Right.
I mean, the idea is not to maximize the number of ticks per trade. The idea is to maximize the number of trades you win.
Yeah. I'm with you.
Okay. Yeah, because you get in trouble. Again, I mean, when you see this going, the reason why I keep the dots on is when it goes back and forth, it's another signal for chop. It's, and horizontal is chop. You want to stay out of that. Even though, well, price didn't actually pop out, but it came really, really close. So with a consolidation like this, it's either going to go up or down. The fact that it's here at the bottom of the PRC channel is I'm looking for it to go up. Although, it theoretically could have come in here and come down too. But I'm not. See, people ask me what do you think is going to happen? I don't know. Just watch. Trust the indicators. When I do other calls, they'll say, well, what do you think is going to happen next? I don't know. We're working on a 4 range chart. There is no service that tells you the trend overall on a 4 range chart. So.
But there's so much here. I mean, geez. Even that little white triangle there at about 11, 17 and change.
Yeah.
That's right down at the bottom of the PRC, and everything's in position for a good trade there. And obviously, we're looking at a static chart, so it's easier to make that statement. But
if you can't recognize them in a static chart, you won't see them in a real one.
Yeah.
But it's well, I'm looking for it to go up here. We'll see. I mean, here's the crossover. Got a lot of black. The MACD is coming up. I don't have a crossover yet, but that's coming. I would wait for the alert zone to be green before I would go in. All right, we got a hint that this is turning.
Yes.
That's nicely positioned right there at the bottom edge of the PRC.
Yep. The goal line starting to curve up. All right, I'm about halfway. I'm only going to go for 5 ticks. If I went,
Right.
I'm going to wait till it goes past the moving average, because I'm halfway with the moving average. These actually act as support and resistance at times. The PRC moving average definitely does. But again, the other thing you're looking at, the alert zone is not up; it's flat.
Right.
It's 9 degrees versus a 70 on the zero lag. And you would expect the zero lag to have the most, but you would not expect that to be down there. So you want this to be going up. What you want it to be like this.
Yep.
And see, isn't that interesting?
It looks like it's retracing in the trend.
Yeah, it's close to the moving average. This is now coming down. This is turning. This is turned. Even though my MACDs are still up, doesn't mean it's not going to do it. But you just have to watch the indicators. I mean, there isn't. Well, I don't know if there is or isn't. This is not a green button, red button push.
Right.
Okay. The other thing is, if you consider the trade here based only on this, you'd have made it. It's just not enough confluence for me. You'd have made your 5 ticks. But you have to get in there. And I just know there's not enough confluence for me, because at here, you have a little flattening of the MACD and a crossover of the zero lag. You'd have made your 5 or 7 or 9 ticks, or maybe even 10 up to here. But it's not a high probability trade.
Right. And that's the stuff as we played with the sim trades. Those are the kind of ones we've just gotten killed on because they just haven't had enough reliability. Once in a while you win on one, but more often than not you get killed.
Well, this is not atypical. I mean, this is, it's interesting right now which way it's going, because this is slightly headed down and this is slightly headed up. It doesn't mean that we're not going to change. It's just I'm not ready to. I mean, this was a perfect one to get in. Up here, wherever we got in. Yeah, they're blue. That'd be fine.
Yeah, that's what I'm learning more and more. Is just pick the no-brainer
trades and let the ones that are kind of sketchy
just pass you by.
Yeah.
And that's where I think we've gotten, had some good learning experience on learning what not to do, which is taking every little thing that looks like it's kind of a fit, but really isn't.
I would say in the beginning, just concentrate on the trades that are outside, are really, really close to the outside the PRC.
Mm-hmm.
That's a close one. It just isn't one you would have entered, but it's there. I mean, see, this is interesting. The green is all the way up. The alert zone's all the way up here. You're not even in that one.
Wow.
It's horizontal to boot. Now, over here, you're getting up. You've got the crossover. You've got that crossover again. I actually would be hesitant because that's going in the positive direction, and the slope is coming down still.
Yeah.
But if this would 45 degree, although this isn't blue, you know what? I'm not taking any of those trades.
Yeah.
It's just
why do it? You wait another 6 minutes and you're outside the TRC.
Yeah.
Poised for a cross and ready to take a safe trade.
Yeah. All right. Anything else?
Well, so as far as the indicators we have so far, that's all. Very good.
Actually, I put up the MACDs. You want to watch for the crossovers. There are a lot of confluence. Again, just added support. A lot of confluence with the other indicators. So it means when it goes over the MACD, the average is going over the cyan line, and when you get the fat arrow, it means it went outside the standard deviation, one standard deviation, which means it has more impetus in going up. So, I mean, look at this. We crossed the MACD here, which is great, but that in and of itself isn't really good. And you come along, and then you get the added momentum here, plus the cross, you're going in a positive direction. It's not a trade idea, but it's just to give you an idea of what you can do. See, my problem is I'm not willing to wait through this up and down stuff. I don't find that enjoyable. And I actually, based upon where the HEMA is and the zero lag is and the alert zone, I know I'm going up, or my guess is it's going up.
Right.
Okay, to there. Well, we'll get rid of that one. But I don't enjoy those trades.
Yeah, they seem kind of
Well,
compared to the others.
it's just I guess I have ADD or something. I keep saying that, but I'm sort of serious because I go up and I go, I'm up here. Let's see. I mean, this is what. Get in there. Let's say get in there. I go up 5 ticks. Now, even though this doesn't end up there, the next time I'm down 5 ticks. I'm right back where I started. And then it goes up, and it goes up. Well, I don't know how that worked out, but you got it. And then now you're coming down here again. It's just not.
Well, you're fighting the core and the goat line.
Yeah, I don't have fun doing that.
Yeah, no reason to do it.
Yeah, so. All right, any others? Questions, comments? But the MACD does give you help and direction.
Just real quickly, can you expand that MACD, make it bigger on the chart, and then just kind of give us a quick overview of what the elements are. You've got
all right. The yellow lines are the plus and minus 1 standard deviation from the average MACD, and the average MACD is I don't really know the numbers. The average MACD is the cyan line.
Okay.
And when the current MACD, it's running the math duplicate, but when the average, I don't remember the periods. After so many periods is the average, and then the actual MACD is now. So it turns out, with the settings I have, that it gives you a good indication of direction, and the higher the longer the distance between the BBs, the higher it goes. So, and the coloring on it is, you have the arrow there. What's interesting is the coloring is more accurate than the indicator of the arrow because of the white ninja prints. We actually crossed. We went outside the standard deviation when the color started. You can see if you look down, but it's not happened to the BB prints. So the green going up and the fuchsia or purple going down tells me when the BBs are outside or below or above the standard deviation. And if it's my contention, if they're outside going up, you're having more momentum. And if they're outside going down, you have more momentum in that direction. And you can see the steepness of the slope correlates that. So for me, I don't have to look at the slope per se. I just have to glance down and look at the color.
So if you see the fuchsia background or the kind of purplish background on the MACD, you know that it's got some momentum short.
Yes.
And likewise on the green, it's got some momentum long.
Right. And then anything that doesn't have color means that the BBs are within the standard deviations.
Got it. So the gray background just means it's not doing a whole lot in either direction. It's kind of choppy, maybe is a way to think of it. Is that a fair?
I would think that it's not out. It's not. It's less momentum.
Got it.
But I mean, you got pretty good action in here. It's just not outside the standard deviation. And then once it's back in, this could have gone up like this. It depends on how it goes up. So look, this is perfect here. Yeah, look at this. I mean, no, that's the average. We look for the big blocks of. Yeah, maybe this is all inside the standard deviation, and that's pretty good momentum going down.
Got it. Okay. What are the yellow dots that appear on that one? On the MACD indicator.
They're neutral. They're not. Yeah, they're neutral. They're dots that are inside. They're the dots that are inside the standard deviation.
So down in the lower.
I don't know why that's green.
Well, as far as the bigger yellow dot.
The yellow dot.
Yeah.
I'm sorry. The yellow dot is the crossover of the zero line of the MACD. What you will find often happens is that the zero line, if it's crossing the MACD, you have an 8 EMA cross. It happens frequently. If you have a cross of the zero line, which is always indication of more momentum if it's going from above to a minus or plus. If you cross the zero line, you will have an 8 EMA crossover.
Yeah, I'm not sure I understand. So what's the yellow dots generated by what line crossing what line?
The yellow dot is generated by the MACD crossing the zero line.
The zero line.
The zero line of the MACD.
I understand. Okay. So it's just basically indicating a shift of from
Yes.
It's going to from one side to the other.
Yes.
Got it. Okay. Thank you.
But it also correlates with an 8 EMA cross every time.
Okay.
The core cross.
Got it.
You can have core crosses without it, because if it's below it, you can have a core cross without it. Just give me a core cross. Well, I can't find one, but
no problem.
It doesn't matter. You don't. It's just what it is.
Yeah,
So I mean, it's just more confluence. It's if you're looking for it. I mean, if you get this to pop up as you're going up, that's great. This is actually coming down, even though this is. Oh, this is a down cross too. Okay, this is coming down. So and then. I mean, you look down, that your MACD is also coming down, which is, you also know because it's coming from green to gray. I think that's all the indicators that's all of the dark side indicators, or the done simply traders. I get rid of names. But, so, any other questions? I mean, that's everything I got.
Yeah, that's fantastic. That really helps a bunch. I know you said you were going to send those.
Yeah, I'll get it rendered and send it out.
So once we have those, we can make know that we're all starting from the same baseline of looking at the same stuff, and then we just need to get our practice on here.